accounting for inventories, and in this module we will do some practice on perpetual and periodic system of inventory maintenance. Are you ready? Your attentions are required, please. So how you will be attentive without having calculator with you? Please get your calculator, notepad and writing device. Okay, now please be attentive. In this question we will see that the opening balance of inventory with us is 400 units, which we purchased at 4 each, and the purchase of units on 2nd January 2000 X9 is 1000 at 5. Then on 3rd Jan we had sales of 700 units. 4th we had purchases of 1200 units at 6. The purchase price is changed. The sales of 1000 units for 12 each, and purchase of 800 units. Again the price of purchase is changed. Selling price is the same, 12 each. Well, we have to enter these transactions in the books of accounts under periodic and perpetual system, and we have to calculate the cost of inventory under periodic and perpetual system using FIFO and weighted average method. Well, it is a comprehensive scenario, so please be attentive and see how to work out all these things. Before having accounting entries with us, we have to do a small calculation in which we will work out that how much is the units of closing inventory with us. So in the question we see we had 400 units in opening inventory. Put it over here. Then we purchased 1000 units on different dates, 1200 units and 800 units. Altogether 1000, 1200 and 800 comes to 3000. Then we sold 700 units. Then we sold 1000 units, and then we sold 500 units. So 700, 1000 and 500 units were sold. Altogether 2200 units were sold. So we had opening inventory of 400 units, purchased 3000, total comes to 3400. We sold 2200 number of units, so that the closing inventory is 1200 with us. Okay, this will be a useful information, and we will see this in our upcoming working. Okay, one more useful calculation we have to do, that what is the total sales income with us. We have sold 700, 1000 and 500 units. This is with us, and the price was 12 in each case. Okay, so that the total sale is 26,400. Well, let's see the accounting entries for periodic system and perpetual system. When we are buying 1000 units, the purchase account will be debited and cash credited under the periodic system, whereas perpetual system, inventory purchase account debit and cash credit. Here this inventory purchase is asset, here this purchase is expense. Then sales, we know cash debit sales credit. In each case, cash debit sales credit. This is the normal accounting entry for sales. But under perpetual system, we have to record its cost also. So for its cost, what we will do, the cost of goods sold debit and inventory purchase credit. Okay, under the first in first out method, we will be doing this thing. Well, so first in first out method, perpetual system gives us 3100. Please note it somewhere. We will do its working, and then we will confirm that this is correct. By the way, as to the accounting entry is concerned, at the time of selling the goods under periodic system, we do not pass any accounting entry for the cost of goods sold, whereas under perpetual system, we pass this accounting entry in which the asset inventory account is reduced and cost of goods sold is debited as an expense. Amount we will verify in the upcoming working. Purchase account debit, cash credit for this purchase. Okay. And inventory purchase debit, cash credit for the same. the inventory asset is being debited. Next comes sales. This cash debit sales credit, both same, but we are using FIFO over here. The cost of goods sold debit, inventory purchase credit. The amount will be verified in the upcoming working. So the accounting entries are repeating now with the change of figure. The change of figure we know is happening because of the change of rate. Here the purchase was at 5 each, at 6 each, and at 7 each. Units are also changing, 1000, 1200, and 800. So by the way, these purchase accounting entries would be same: purchase debit, cash credit for periodic system, and inventory asset debit and cash credit for perpetual system. Under periodic system, now we have to close our opening stock in the cost of goods sold. So opening stock, we know very well that it was 400 units at 4 each. So those 400 units at 4 each is 1600 cost of goods sold debit and opening stock credit. Then altogether, all the purchases, the total of the purchases made during the year will be closed in the cost of goods sold, and the closing stock will also be closed to the cost of goods sold. Its amount will be verified when we will work out the first in first out method or weighted average method. By the way, accounting entry is the same: closing stock debit and cost of goods sold credit. And then altogether, the cost of goods sold that we have worked out over here, this plus this minus this, will give us 11,400, which will be credited, and income statement will be debited. This is in fact the closing entry to close cost of goods sold into the income statement. And the sales that we worked out during the year, all the sales income account will be closed in the income statement. We are familiar with all these closing accounting entries. So this is periodic system that normally we do in our earlier module or in our earlier education of accounting, financial accounting thing. So this periodic system is done. In the perpetual system, we see that altogether cost of goods sold was debited. Okay, cost of goods sold was debited. Just make total of this: 3,100, 5,300, and 3,000 comes to 11,400. This 11,400 will be debited and cost of goods sold account will be credited, the same closing entry that we had over here. Okay, and the sales will be closed to the income statement, the same closing entry that we had under periodic system. All right, let's have a look on this purchase expense account. So during the year, purchase was debited. This is under periodic system, remember, 5,000, 7,000, and 5,600, and will be close to the cost of goods sold under this accounting entry, 17,800. That's it. And sales were credited with 8,400, 12,000, and 6,000. Total 26,400. Here we go. Sales debit and income statement credit, the closing entry for the sales T account. Okay, that's great. So under periodic system, purchases are recognized as expense and closed to the cost of goods sold account. Well, now this stock account under the periodic system will be opened with opening balance of 1,600, and then it will be closed to the cost of goods sold under this accounting entry: cost of goods sold debit and opening stock credit. For bringing forward the balance of opening stock, there is no accounting entry. Remember this thing. And once we are done with this, we have closed this in the cost of goods sold. You see, credit stock account and debit the cost of goods sold, 1,600 under this accounting entry. Then we have to pass closing entry for the closing stock, which is stock account debit for 8,000 and cost of goods sold credit for 8,000. This is the accounting entry for that closing inventory under the periodic system. So Now this stock account will be carried forward equal to 8,000 in the balance sheet, and cost of goods sold will be closed in the income statement 11,400. This is the usual working that we normally do, opening stock plus purchases minus closing stock. The same result we get from this working. Well, under perpetual system, the inventory purchase account will be taken as an asset, and this asset will obviously have its opening balance in the debit side, 1600. All the purchases are being debited over here, and as and when these are consumed, these are being closed to the cost of goods sold. Straight away, these cost of goods sold accounting entries are being posted. 3100, then 5300, then 3000. Just see over here, 3100, 53,000 and 3000. These are taken to the cost of goods sold like this, from here to here. Now we know very well that what is this mechanism of posting. Okay, so all this cost of goods sold account will be closed to the income statement equal to 11,400 under this accounting entry. Okay, and the sales account is closed in the income statement like this. Under perpetual system, there is no difference in maintaining sales account. Very well. So this was all about the accounting entries and ledger accounts under periodic and perpetual system. Now it is the time to calculate cost of inventory under periodic system using FIFO method and using weighted average method. We know FIFO means first in, first out. So just come over here in the question, in where we see that the first in, first out, rather come over here. We have closing inventory of 1200 units with us. Okay. So this first in, first out means those 1200 units, these 1200 units would be reflecting, remember this word, would be reflecting 800 units at 7 each and 400 units from this 1200 batch at 6 each. Okay, we have 1200 units remaining in closing inventory. So come here in the FIFO method. So 800 units at 7 each gives us 5600, and from the batch which we purchased at 6 each, this remaining 400 will be multiplied. You will get 2400. Altogether the closing inventory is 8000, and this is the amount that was reflecting over here as well. Okay, or in this accounting entry, as I told you that we will work out and we will then verify this. And weighted average, the formula is opening inventory plus purchases, the cost for that divided by total units of opening inventory plus purchases. We will get cost per unit. So here we go. 1600 plus 17,800, the cost of purchase. We get it from here, 17,800 and 1600 is the opening stock, and divide it with its number of units. Total number of units of opening inventory is 400 and 3000 is the number of units purchased. So the per unit cost for inventory under weighted average cost method is 5.7058. Multiply this with the remaining units of inventory, which were 1200, bifurcated in FIFO as 800 and 400, but here it will not be bifurcated. Straight away this 1200 will be multiplied by this 5.70, and 6847 is the cost of inventory under weighted average. By the way, if we will use weighted average cost method, then this 6847 will be taken over here. Okay. So the important tips to remember, the ITTRs in this module are: perpetual system gives us balance of inventory after each information of the movement in inventory. either increase or decrease, purchase or sale, any loss, normal or abnormal, for each movement, the perpetual system will give us a closing balance in the ledger at once. We don't need to wait till the end of the period. Whereas in the periodic system, we have to wait till the end of reporting period, and then we count the inventory and multiply it with the appropriate rate as per FIFO or weighted average. Okay? So thank you very much for your attention.